Good afternoon, everybody, dear participants. Today we are opening our venture investment track at Sber Startup Summit in Moscow. So we are together here to discuss the thaw of the venture winter, the realia in the AI transformation epoch. There was a boom of pandemic, then decline in 2022-23, and this year and last year the market showed growth of volume of deals. So what's next? Sustainable recovery? Or is a spring in store for us? Or was it just a temporary thing and we will get stuck in the thaw or even getting back? So I'm happy to discuss it today with our experts. And I hope that we will extract some interesting insights and facts, possibly importantly with an understanding of where the investors should exit. I would like to start with a very short analytics, some piece of research we took from the report on the first half of 2025, which is the freshest. The Moscow Innovation Cluster has prepared it, and we have extracted some facts to use it today to understand better what's in store for us, and based on which numbers we are discussing the deals today. Let's show the presentation. So here exactly the presentation. Okay, let's move on. Compared to the similar period of 2024, the volume of investments in the first half of 2025 grew by 80%, 80+%, and 90% at the later stages. Increase, and clear enough, you are aware of the deals with Ozon and other big techs. And 90% was the growth of the size of average bill, totally. If last year, in the first half, the business angels were leading as a format of the players, participants of professional market, this year their activity has slowed down, and private venture funds finally, again, came up to the forefront because we felt sort of slowed down in the format for investors. And popular technologies by industries were technology for industry, healthcare, and business, which was very often the case because it is this niche is to digitalize faster. Industry and healthcare should say that that's based on the deals at the later stage, and there are fewer in number, but by volume-wise they win. The three basic peculiarities we're going to discuss today: M&A deals growth, at least compared to the recent years, the previous year, for instance, and up until this year. Three recent years, I would put it. Also, everybody speaks about high interest rate, key interest rate. There's some trend. Well, but the experts will be talking about that. As to what kind of assumptions and the venture fund model. Still, they adhere to the model, or maybe not. Let's discuss it today. So, and also interest to entry to the exchange, also quite noticeable, mostly as to what strategy startups choose. The activity reduced of the external capital funds, and along with this, we could see some alternative strategies. Also going to discuss it today as to how relevant it is now. Is it a hype trend, or it is sort of proved by some market conditions? We'll discuss it with you today. And an opportunity to obtain collective investments at an earlier stage, which is also quite a trend today. And we are talking about the stages for which collective investment previously was just as an exception, not a strategy, and development of technological solutions without external capital involved, only thanks to some orders or sales, which is also quite a strategy for classical business mostly, and does not allow you to scale faster, but it does exist. And key questions of the session: where to invest, whom to sell to, and what's next, decline or growth? If it is growth, why? And my metaphorical, as our title of the session, question, whether it's the seasons to they correspond, it's spring, winter, thaw, or are we in thaw now, or do you think differently that the planet of our venture will be moving in a different direction? Those are the questions we would like to get answers to. Thank you. As for my part, that's it. Let's get down to the questions to our today's speakers. The first question about the volume of investments. And maybe we'll start with Vitaly. 2024, first half of 2025, showed quite positive dynamics of volume growth for investments in venture deals in Russia, especially compared to 2022-23. So what's your opinion as a result of the year, next year? So this growth will stay, or will we notice a different trend? Maybe there was some external reason why this growth is with us now. Well, in 2023, the market generally reached a substantial decline. I think it was 10 times, and actually, the Russian venture market was sort of buried by many. But our outlook is quite systemic. Been 17 years in the market, and we've been trying to look not at some emotions, but at some certain quite definite research. And we do have an idea that the market depends very much on such factors as whether it's just consumption market, when the population in a country just consumes digital products created abroad, for instance. From the point of view of venture investments and investment into companies, consumption of those products by the population, by local market, and financing, it's not big one, but somehow the Russian market did exist. And there were investments, and unlike other countries, even some local leaders appeared, like Yandex and VK. And there are some developed countries, but no technological leaders in place, those who are just using foreign solutions. But there are others, like closed, like a market like China, but their local leaders are growing, investors investing, not only local, but external too. Based on the research, our impression is very clear-cut. Since the Russian market is closing, as well as China, from cross-border solutions. The regulator are doing it this way, so the market cannot but grow further. And in this respect, in 2024, our bullet point was, our statement was as such, but the research didn't confirm, like, for instance, they do now. But totally, it showed some decline somehow. But for the fourth quarter of this year showed exactly that the market is going up. 2025 also up, going up, and actually we can see that as minimum the market might grow 10 times, just because it already has been at this level quite recently. But further on, whether this growth will continue, for instance, like 70 times, well, it depends on the regulator. If they open up the market for cross-border solutions as we used to have, totally, it might not happen. But if the market stays closed, it will be more than 70 times growth, because external investment volumes depends very much on the volume of GDP. And if we look at the majority of countries which are thinking about that, the 72 times will be the decline, the gap, which is now being leveled off, and this decline will continue to disappear and level off in case the regulator will be aiming at, for instance, the fact that the business should use the Russian-made solutions, and the users should not use any foreign-made solutions. That impacts the market tremendously, and we can see that possibly it's not even a thaw, but rather a birth at the moment when everybody buried it. So we have so many metaphors in different philosophical areas. Okay, same question about the volumes to Anton. Anton, very curious to listen to you because we've seen the news that Malina VC, your fund you're managing, you're aiming at a later stage. Please share with us about the trend, about volumes of investments and why you chose this way to go. Yes, I'm very close, and I'm very. I agree with Vitaly because indeed this is exactly the work we did, and that is why we in 2023 launched this Malina fund. Well, possibly everyone was saying that you either have to depart because the venture market is closed and nothing will happen. And we did a research to understand that this is going to shrink, but then it will jump back.
We thought that the impact would be more than that of 2024, but the only area where we missed something, where we failed because of the rate, is in the stage of the company. We thought that the companies in seed stage, pre-seed or seed, I mean early stages companies, though for many before A stage is also an early stage, especially here in Russia. With this spring, they might go up, but the rate changed our plans, not only for us, by the way, and that's why the time of this change, this spring changed, but not for everyone, and it just impacted a lot of companies at early stages with the rate. And when the trend went up, we made a very complicated decision for us. Either we close down in 2024, we thought to close down, or we rebuild the whole strategy, the whole business model. We have it as all other businesses have, and we rebuilt ourselves. We had a strategy session for 2 days, and we realized that we need all the same but other stages, late seed and round A. These were our options, and we worked in it in a regime not very loudly. End of 2024, we didn't look at startups at early stages. We did not announce that. And how many deals do you have? 4 deals this year we will have, and they are in the middle segment. Yes, the average check, the whole round of the deal is around 130 million. So this is almost classic for us. And we realized that our capital of 1 billion we started with is not enough, and we agreed upon growing in 3 times with shareholders. That's why we announced the fund of 3 billion. And the proof is important because the justification, because the rate is relevant. The rate is going down, but it also was a positive basis. We do not know where it goes next, and we all hope that it will go further down, but it will not be a painless process. These are 2 interrelated things. It will be beneficial, and we will have to be prepared. Just recently with my partner, we had a strategy session, and we thought of entrepreneurship. Everyone says usually that in Russia it's hard to build anything. 20 years ago, 15 years ago, or 10 years ago, we thought of the experience of my colleagues, entrepreneurs, entrepreneurs, and actually the same, it was all the same during various periods. Turbulence is always here, but some niches are still growing. For instance, real estate. Everyone says that it is frozen and the construction sites are stopped, but the price of apartments in 5 years, it grew, and the profitability is more than 70%. So someone can earn on that. We earned on that. And there are several examples like that. And now we're looking at, we do not use the word venture anymore. Inside, we do not speak about venture. We are speaking about IT businesses. We are interested in growing IT businesses, thinking that, knowing that the checks are growing. And with Vitaly, we discussed it. They have the same appetite for such investments. Similar funds, I think, will emerge. And that's why I think in 2026, we will see more scope, more volume. You mentioned 5 times more, I think. Super. We will discuss other areas as well. I have a question to Daria now. Daria, you were preparing the analytics, and I picked some of important points for our intro from your work. What do you see as a trend? Will we see growth of scope, or these are just the remains of large businesses receiving these large investments, and the trend will be for declining scopes and volumes? Indeed, we see the trend, and it persists for 3 years now, when the market is growing as a result of Q1, as Vitaly mentioned. Well, it is reviving after death. Yes, considering the decline, 15 times decline we witnessed, we think that this is a phoenix which is surviving and it is recovering from dust. We think that this trend will persist in the future. We see that in 2025 the growth was around 90%. And we also considered some of the deals after having published the reports, and we see that the market is actively investing, is still actively investing, and the end of the year is usually a boom because, yes, we have time left, some time left. We have to stay here in 2025. So we think that in the second 6 months, as it is usually the case, the volumes of the market will be even larger. In general, if we look inside the volumes of investments, around 75% of the recent 18 months are late-stage deals, and we see it very clearly as a result of the first 6 months, 2025. The main peak was witnessed at that period of time. Does it mean maturity of the market? Well, maturity is probably a very loud word, but anyway, some maturation is underway, and we think that this trend for larger check, for more growth of interest among investors to late stages, development of culture of investments, also among the corporate funds, will lead to a situation where this segment is growing. And the remaining 20-25% of the scope are business angels, 20% of the scope and 80% of the deals. So we should not just cross them out. And obviously, it'll all consider macroeconomics, and the key rate now it is going down, and we hope that it will help the market in with a time lag, but it'll help it to accelerate. And this segment can also grow, though the focus will stay somewhere in the BC plus pre-IPO. Thank you very much. So let's move forward a little bit, speaking about a similar point. Last year, business angels were the key participants of the market. We witnessed significant activities, and I have my own opinion on that. Everyone tested their formats, and syndicating through private capital, everyone got together and made collective investments and formats like that. From my perspective, not everyone was satisfied with the result of where and how they invested their private capital. But I would like to know from you, what do you think? Who of the participants of the market will be the leader in the market? Private venture funds or state funds or corporations or corporate strategy, corporates as a strategy. So who is going to be the leader in terms of the format of investments? I think that at early stage, it's quite logical that it'll be business angels. In addition to that, the early stage funds, for instance, our fund, Creative Venture, because we have the business angels who will be more effective in covering more startups. Our mandate is around 30 companies to be financed in 2 years, but through the fund we will be also visible in statistics. So I think that the answer to the question, probably the scope is not as large because we started investing into later stages. But in the amount of deals, the business angels and the early stage funds will anyway be leading in the number of deals, mostly in early stages. But what we are happy about, the large scopes will come from more mature and later stages. And it is great that colleagues now also switch to such stages. There are those to buy, to sell too. Yes, important factor is that you do not only select a good startup, but also think about the whole process of financing. And this is the key change in the Russian market. We never witnessed it before. First, you invest in the early stages, and when the company is around 3 or 5 or 7 billion in its assessment, you can earn 20 or 30x. But you should sell it to the strategist at that period of time, because funds who invest a lot into these stages, there were none, and it takes more time, it is more painful, right? Well, now we see such structures around. You do not have to wait for the company to grow up to 3 billion, and you do not have to drag it from kindergarten up to. I mean, there is a period we are also interacting, but the later stages. Previously, those were Russia Partners, Bering or Elbrus private equity funds who participated, and they are not just ventures, newspapers, and shipping lines. But now this is a different story. Equity funds, and we heard about several funds who accumulated 10 billion, and that's enough capital to continue growing a company at a certain stage. But I see that from the standpoint of the scope, funds will be leading for later stages, mature stages, not only venture but private equity funds. But at early stages, anyway, the leaders will be the angels and early stage funds. I think that next year, I think we will see a boom of business angels because, in fact, let's put it like this. When business angels start to invest, when they see, where they hear about the company everywhere, not just startup summits, everyone says that the market is growing, the market is growing. So it looked like as if in 2021 at its peak. As professionals, we start investing before it happens to have good assessments with competitive terms, discuss it with startups. Now early stage startup assessments is 2-3 times lower than they historically has been in the Russian market. In mature stages, they are in a normal status now. They will get higher, but now they are normal. So we see an opportunity now to get it in the early stage in terms of timing, to get this additional profitability when no one values these early stages. Everyone wants later stages. But yes, you have to do more work, more hustle, but the investor of the fund should have understanding. And about the rate, that's also important. But profitability will be in both areas, but in both options. But we have an opportunity at early stages to get it larger, to get more, basing on the situation that will not last longer than 2 years. Understand. Thank you very much, Anton. An additional question to you, because It is taking too long, probably, about the previous one. So let's speak now about the models you believe in. For instance, there is SPAC and retail investors who can enter at the early stages, crowdfunding in any form, corporate venture investments in which I believe very much, or other models. What are the models? And by the way, pre-IPO, what other models are the most successful for you? What do you think? There is a matrix in Skolkovo. For instance, every startup should have its own instrument at the specific growth stage. We build the matrix, we build it for ourselves, we understand the matrix. At every stage, you can use various instruments of financing, and they are effective for specific stage. I do not like it that all the charts are only available for financing, and even the death valley that is shown, it is shown from the standpoint of financing a startup and attracting investments. But actually, the matrix looks like it should be also be based on resources. I mean, business model, not just external capital. Right. External capital is one of the instruments that is more often the case that it is available. Sometimes charismatic speaker or the founder, he cheated on others or did not. It might be a strategic partnership, not exactly capital, right? But these additional resources, from my perspective, are the key element that is not considered. When we take a business angel, he has limited resource. As an ecosystem, he is a network of his own people and competences, and that's it. If now these competences are enough for developing a startup, this is a good deal. Corporates, CVC, corporate venture capital, corporates' interests are usually sustainability of corporation or development of adjacent businesses of the corporation or the core business of the corporation. So if for startup this corporation is one of the players, market makers of his market, then the deal with the CVC is a good one. But the majority of startups are outside of these conditions. The majority of startups on seed stage, round A, call for additional resources and competences. What are these competences? Management. I mean, in the companies we are entering, they do not have the board of directors, or it doesn't operate. They do not know how to operate with it. Probably they started just recently and they are very small, but their thinking is like they are a garage startup. We say you cannot work like this further on. Before 100 million and after 100 million are two different companies in terms of resources, thinking and resources and all other things. Strategy sessions and business angels and corporate venture funds, they do not have the willingness or instruments to invest with such competences and time into startups. No strat sessions. They do not plan to make strat sessions together. They do not plan to analyze corporate contract, analyzing the risks. Venture funds are for that. They have always been operating for such purposes. After venture funds, many people like to enter. People approach me asking, do you have anything to look at? Well, it means that you are a guarantee of quality. In this company, everything is fine-tuned and company survived. Much work is done, scoring and management system and legal setup of the company. So the company is ready, a very good company. If it is even profitable, then it's great. Why not taking it? That's why, answering your question, for every stage, you will have your relevant instrument. Even inviting partners. We have a couple of deals with large funds. They are our partners in the deal, larger funds than us, or quasi-state funds. But we understand that for this target, this fund will be useful. That's why we invite them into the deal, because their resource is useful. Understand, but briefly speaking, what are among new models? What are the most relevant for you? For instance, if we're speaking about about opportunities to exit for collective investments for early stage startups. You know, I have my own opinion on that, but what is your opinion? What we launch is not that I am announcing anything, and it was in the news, but the Malina Venture Club. Why do we think that business angels are not very much investing today? Because they went into the market and caught some defaults, and they do not have resources to score as effectively as I mentioned. So they have to go somewhere. To Vitaly, to you, right? That's what will going to happen. Consolidation of the market. There is infrastructure, expensive infrastructure. My team is expensive, and there is consolidation of expertise, and there is consolidation of success, because such work with companies is a key to success and will also impact the ratio of default. That's why they will come with a check, 500,000, 1 million, 10 million. Everyone can select their own venture fund. And what I mentioned in 2023, we will all go into a proper investor conveyor belt. That's how it will look like. Thank you. Daria, a question to you. Could you please tell us, you are analyzing a lot, and you know, I know that you have a huge funnel of startups. Everyone approaches you to get what we just discussed with Anton, to get support that is resource support for early stages. What do you see in the trends of the sectors and niches? What is the area of startups is leading today? Probably B2B software for automation of business processes is something we're crossing out now. This is not the vertical thing. This is a leader all the time. But probably healthcare or industry or something unusual. Insurance in real estate or legal things.
Yes, actually, in some, we did a research looking at how the fast-growing startups look in Russia, analyzed them from the point of view of market niches they are related to. And it seems to us that venture, well, doesn't exist in a vacuum, and it resembles to what we generally see. And the right thing was said. That IPO for business, 27% of fast-growing startups are there. The second one is industrial tech, 20%, both soft and physical technologies for industries. So those are two absolute leaders, and then goes three other segments which can be identified: transport, logistics, solutions for those sectors, fintech, and power solutions for energy, which was not quite obvious for us, but nevertheless they do exist too. So if that's how the fast-growing startups market looks, but we decided to look deeper to see that even inside those fast-growing niches, there are super champions. Those are the companies which perform more than 200% growth. Yes, possibly they are AI. Well, of course, I'm joking. AI, of course, is number one everywhere. Yesterday, it's mostly a question as to how applicable it is, if it is applicable to you. Well, should you have applied? Yes, indeed. So among those two champions, we saw the cybersecurity segment and telecom also. And respectively, we believe, we think that we should be more active looking at them to understand whether indeed that's true what we can see in statistics, and this will be sort of translated into the growth of those niches. Yes, I agree, because we did training for startups aimed at the market areas, and interestingly, in banking and financial sectors, there were a lot of cybersecurity, and even in education and electronic commerce, whatever's related to what's being traded through digital. And there's so much, there are so many projects there. aimed at anti-fraud and not exactly, well, yes, and a lot of projects, as I've noticed, that sort of fix the generative AI, like using generative video and media segment, for instance, sports, because some startups applied there with embedded cybersecurity in a way. Also quite a peculiar trend. I liked it. Also dictated by the market. Indeed, AI not only creating its own niche, but developing other technologies. Yes, and quantum coding, and in response to that, security of the quantum, the reverse quantum decoding. So, and as for telecom, can you give more details as to what's maybe some examples of some technologies as to what kind of instruments are used there or businesses? Well, actually, possibly. The focus there is on the equipment for telecom, not exactly the software, but the physical tech, which is being developed in this segment. Possibly this is the trend related to import substitution because it's a relevant thing for us, and that is why it's the focus is on this kind of technologies. So thank you very much. Very interesting changes in telecom, because we're very far from that moment when our giants had emerged in telecom, and they are sort of going into different directions and areas. And big data, they are stored because everybody used to have SIM cards, and they have a lot of information now about the people. And that's a very interesting story as to where they will go next. Okay, let's move on. And I have a question, quite a big one, as to where to exit. How do you view? How do you view? So, question to Vitaly. Why it is big question, because as Vitaly said at the beginning, when we are looking at a project, it should not only be cool, but we should also have a good idea of its next step. And it so happens that there is a trend of those late-stage funds appearance. Whether it's justified, do you believe in that? But if you fail to sell it to another fund, where to then go to the exchange? Because the exchange says that it's open and calling everybody to come on and to come on board. So maybe there was a growth trend, but we didn't see it in 2025. So where to? Maybe to strategists or dividends, or by the way, dividends, yes, but we will discuss it separately. Yes, if we have time, we will discuss it. Indeed, exits, investors, when it enters an entrance, a facility, he looks up where the exit is. Well, we don't want, clear enough that we don't want to invest into an entrepreneur who's looking around for an exit. We, of course, would like him to forever identify himself with the company, to devote his life, as Kerman said, for him to have this as his mission, because after first difficulties, he will throw it away and leave. So if there are startups here in the audience, even if you have a strategy to exit as soon as possible, don't say that to your investor. But clear enough that we are calibrating about the exit with the entrepreneur all the time, and we face such things as, well, it's clear that well, it's selling is not always a story. For instance, you wanted an IPO, but a board of directors, or the entrepreneur understands that he either sells now or in 2 years the strategist will kill the company, and no one will drag up to the IPO. So in this respect, we should bear this in mind. And importantly is that currently we can see a bigger number of exits that we used to have before. Well, the destiny of a company, investors and founders are very different. And if you know, for instance, the Delivery Club founder, they were bought out 9 months before the deal. So we as investors did earn about 33x, and then the next who bought and resold it then to Sber, then to Yandex. So the companies are growing, and we, the founders, there's no founders or us, while the company showed successful growth before its full sale or divestment. Whether it was successful for the first players, well, not clear. For in that case, it was successful for all. But of course, there are cases when it is successful, but the founders did not earn much, and they left, and the investors, for instance, did not earn much, and the company turned out to be successful. And otherwise, the company, for instance, I heard a lot, like, for instance, a company closed. Well, do you remember how many words there were about investors and founders? They had earned their money, and they sold it to someone already, and because of the market or what? Yes, because of, and it went bankrupt by the end. So we, if on the investor side, a big number of new opportunities opened up for us, and exactly because of that, we expect the market to grow because the liquidity problem was solved. Venture now, as was said, is the most highly income, and highly risk. No, well, of course you can do a lot, but if you do it in a good way, it's not a risky instrument. But what's the problem if it is the most high income? But the problems are why just a part of the capital is invested in that? Why not? Because of the liquidity. Conditionally speaking, if out of public instruments, I can exit whenever, but here you have to find the buyer first. For instance, like a real estate, to whom you sell. Even if you found one, how much does it take? 7 to 9 months. And then if you got an offer from a strategist, well, actually, it so happens that this is not even real estate, even worse liquidity-wise, because you earned, but to implement it is difficult. That's why not everybody goes there. For us, the changes that have occurred in the Russian market recently, I mean, the OTS launched by the Moscow Exchange and is an opportunity to list them there, not as the first or third echelon. Liquidity a little bit worse, but still, you can offer. And some might buy you, and that's a good story. Marketing by banks of pre-IPO stories, while conditionally speaking, just private companies at mature stages, attracting some things. And we did see cases when they raised about 1 billion. Half, for instance, goes to cash out, and the other half for the development of the company. For us as investors, that's quite an exit, because it increases a desire to invest, because you have an idea of the exit. And late-stage funds, why they appeared, we know, because a clear-cut understanding that the state has to increase the stock market several times, and for this, the companies should be boosted for growth to come up to IPOs. For us, it's also a potential buys. If we invested earlier stages, at some point we might grow and sell. Then goes options like acquisitions by strategists. According to the statistics, in venture we can see some increase. M&A in Russia in 2025, 2024, 2023. Historically, we can see that there are newspapers and vessels. Venture also, it's Azbuk of Kusa, for instance, sold to Magnet. Yes, but the last peak occurred back in 2011, 2013. Then it went bad, and since venture is a business of exit, also corporations and ventures are growing because the corporations see that foreign players have left, or the regulators slow down something. It's a irreversible process. It will stay. No one will come back because they will not be let in. In digital sovereignty, everything is okay. In hardware, in some other technologies, there might be some, but in digits, they will not let them in back. So what happens? Well, the global companies, the big techs, are looking as to this reshuffling of the market. They want to participate. They can do it on themselves, but it takes time, especially some narrow niches well, yes, to integrate as conditionally speaking, like feature in your own solutions, to embed it in the ecosystem, just to reduce time and get the team and performance, because it will be easy. Maybe it will be easy. Well, leads and technologies and all, it takes time. So that is why all those things, that's exactly what we didn't have on the market before, and those are the drivers of venture market in the world. So totally, a big number of exits and options we didn't have before. That is why we are aiming at, not as we did like 10 years, 5 years is okay, for instance. Thank you very much. Thank you. Anton, same question to you. I will add, well, since we reviewing our target, we're always reflecting not only about exit, but about sub-exit and bypassing and approaching. I mean, for Lona, as to how to report and how, and we put it in our strategies. Venture funds, the way I view it, and and owning this expertise, and based on the expertise of my team, venture funds is a good strategy. It's your good partner on your strategy. With all portfolio companies, we strategize a lot on the rounds. Like you already mentioned about management. Yes, it's operations and strategy. Also, you use the resource of the fund that's on board with you. Yes, and we can even get away with, we can get away to Sber City, for instance. But I didn't even see where we are now. Market strategy-wise, with research and investment strategy, it's not about governance, it's about market and how you achieve those indicators, attracting the external resources, admin resources, or investments. And then on, at every stage, there might be an exit for venture investor or sub-exit. Why sub-exit? When you don't have enough for the next stage of development, like shares, or if you don't want not to dilute the share of the team, but actually the fund is not against the cash out. Well, and a sort of sub-exit, because the stronger player might come in for some time. Yes, because the stronger player, from the point of view of its admin resource, can drag you into another league, up into another league. And we as a partner are very much interested in that. And sorry, would like to clarify, and very often those are strategies, yes, mostly yes, or funds around a strategy or a strategic resource. Yes, one bigger, tough fund comes in, it starts minimal number of shares he wants to buy. He dictates. He says, guys, I like it all, but now I want 3%, the founder 2%. I want 25+%, but the deal will be closed in a year's time, or 25% now, but in 2 years I would like to increase 40+. Because otherwise, if it is a corporate facility, it is important to synergically integrate the team into his own business. And that is why it's 15, 25 from the beginning and then growing. And they put it into the agreement. Maybe some examples you can quote. Maybe you've had some experience with someone. Yes, bigger funds, like again, let's call them the great funds, our partners. It's Vashod, Camaflow. Those are the funds. Investments of a different format. We did not work with them yet, but we are talking closely to them. But with those guys, we already have some closed deals, joint closed deals, and they already financed some of our companies, having entered as a more mature partner from a point of view of capital, volume, and capabilities. So the next investor that comes in, he dictates the rules. Speaking about a strategy fund with state money, with public money, a number of other funds. Well, actually, it's difficult to dispute, to argue, because strategically they put it on 3 years, and we're not against that, to exit at this stage or maybe sub-exit to hedge our risks. So this exit, again, might happen at a rolling stage on the invest rounds in this framework of investment strategy, or maybe sit a little bit on dividends, but, well, it's always something in back door. Well, sometimes they said, okay, maybe dividends. We haven't seen any dividends, but we are not very active for a long time. The next thing is management buyback. Somehow we forget about it, but in Russia it is not that popular, but rather because of the complexity with the money in the market. And companies will raise more, and maybe they will be doing the management buybacks because it's good. Well, usually if someone gives you, just you take. And at some point the shares, well, they can be very expensive. My portfolio company, we are in dialogue there. One fund is buying a share, and we are giving a short loan. They said, why are you not buying out? And we say, you should not sell this share because you will increase your revenue so much. Your share will be at the end of the year 2 to 3 times higher. You don't have to do it now. And I also say to that fund, don't do that. Give them a loan. And they said, okay, if they give us, we'll take. So, or maybe, yes, you have to finance it now, finance the risks, and yes, and there's a window you should close at the moment. That's always, well, based on longer-term strategy, you should look up. I don't like many companies not looking longer term.
That's why they increase the default statistics. But exit is actually possible with all these things. But among new instruments, specifically for Russia, I actually hope on MOIC Start that will accelerate the liquidity of the secondary market. That's to the previous question, right? And the investment platforms that are operating today in a fragmented manner will get together, and you will be able to have a through-going opportunities. You can take at one stage and then sell it on the rounds. That will be a good instrument. Thank you. And to finish, a question to Daria. You as an ecosystem company, and you know, to close the session after we listen to our experienced experts, what do we see? Is it a thawing? Do we expect growth in the nearest future? I'm especially interested in late 2025, beginning of 26, and we will finish the session. We are expecting growth, definitely, because this is a thawing, and then we'll see a beautiful spring coming. And in general, as an ecosystem player, we're offering various measures for development, and we see that there is interest towards such measures and instruments related to both sides of the market. There is interest among investors who want to look at startups and want to have a wider picture and want to look at new instruments. And at the same time, there is interest among startups who come to us asking questions about how to find an investor. And colleagues mentioned IPO. This is also one area that is of interest for startups who want to know how to get to IPO, a way to IPO. This is our educational service. And I think we will see a growing future indeed. Very good. So now we will have an interactive session with the audience. We want to look at the results. Please base your opinion on On what? A question from the audience. Let me, since we know about Sber 500, yes, please. Well, this is just a question. I asked it already in the chat, but I will articulate it again. Hi, Renat from startup Sber, graduate from Sber 500, and I'm representing a startup. And I want to ask a question. How do you see, do we have a native path in Russia when a startup is getting an investment at pre-seed round and goes through all rounds, seed A, B, C, and D? I mean, is there a practice of this in RF? I'll explain why I'm asking. We're a startup, and various strategists made an offer, and this is a final offer. For instance, 51% and 100%. For me, what should I expect? Push them forward and saying that let's go the native way, or just go and say take it, it's okay. This is case by case. I am giving the floor to colleagues now, but if it is pre-seed initially, we're speaking about the technology with no revenue now. I have a deep tech startup. We're scanning source code, then make the reverse of architecture and gives an image of how the system under development is built. But you do not have the pre-sales. We are developing on our own efforts with our own money, and we attracted grants. We won grants and accelerators, but we are in Sber. That's why now we are preparing a pilot project together with strategists. That's the stage.